What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be talking about in this update is the possibility that AMC goes on a very significant run in the near future. We are seeing some very important things happening technically with the share price in the chart with AMC that I want to go over with you guys. And I just want everybody to be aware of the potential of the moves that we are seeing right now. Now, we're going to go over some caveats to these moves as well, because we do have the overall market going to weigh us down at any given time. Next week is really important with the Fed and the rate hikes and the GDP data coming out. So I want you guys to be aware of every possible scenario. Now, in addition to this, we also have to talk a little bit about the options data, the short interest data on AMC as well. And in addition to this, we do have a major bank that is very, very bullish on the movie theater industry going into the next year and a half. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So AMC closed the day today down about 18 cents or 1%. Definitely not what we wanted to see today after going up to 1782 at the high within the first couple of minutes of the open today. But there's a few very important things that I want to cover with you guys. The first, we're going to be taking a look at the 4-hour chart right here. Now, again, we've seen this 4-hour cross up, consolidation above the 200 EMA, and using that 13 EMA as a dynamic level of support going higher. That is a very bullish thing to be seeing. Now, right now, the 13 EMA on the 4-hour time frame is $16.14. In the after hours, we're trading at about $16.43, but we closed the day at $16.36. So we are trading at a decent level above. It's very possible that we come back down to flash below and maybe even wick below like we saw back here, and then potentially come back to the upside. But there's some very important things that we have to look at on the daily time frame when we see a daily crossover to the upside. The last time that we saw a daily crossover right here, we saw a very significant run all the way up to 34. The time before this, decent run back here above the 200 EMA before we got knocked back down. Then this run right here that we saw with this 13 EMA crossing over the 48 on the daily time frame here was about, let's see here, a 40% run right here. And the big one coming all the way back basically to that first kind of origin of kind of how we all found AMC and GME was right back here. And we take a look at what percentage gain this was all the way up to the top, 857%. So these daily crossovers on AMC more times than not lead to very, very significant movements to the upside. Now, there's really only been two occurrences in the past where we have seen AMC start below the 200 EMA, cross below it on the daily, then move above. That was the first run back in January of 2021, and this run back here where we witnessed the halt. Now, right now, we are slowly making our way up to that 200 EMA on the 4-hour time or the daily time frame here, and that's currently sitting at about $19.57. And we've gone over a couple of these key resistance levels before. But again, us breaking and holding above that, I believe, let's take a look at it on the 4-hour. It's like 1660, 1663. Yeah, so let's see right here, 1660 to 1670. Breaking and holding above that is going to be an incredibly bullish sign for AMC going forward. Now, this could lead to very significant moves to the upside. But again, those caveats that we were talking about a little bit earlier, next week, we have some very important things coming out from Jerome Powell in the Fed. Now, everybody is going to be paying attention to what the rate hike is going to be, 75 basis points or 100 basis points. And I think a lot of people are going to overlook what's actually really important in this meeting coming up. And it has to do with whether or not the Fed and Jerome Powell actually expect to be cutting interest rates at the end of 2023. If the Fed comes out and says, yes, that is in our expectation right now, and it makes sense, and it is in alignment with the bond market and the other kind of probabilistic ways to kind of price in some of these Fed meetings and the actions of the Fed going forward. If the Fed agrees, this gives us a light at the end of the tunnel in terms of sort of this recessionary period in the quantitative tightening period, which the Fed's not really tightening, but we can kind of go into that in another video. But if they then come out and say we don't agree with this, we could be in for more sell-off. The second thing is the very next day, next week, we are going to be getting that GDP data, which when that comes out, most likely in the negative, that is going to trigger a recession. But again, we've already been in a recession technically because the second quarter GDP would have already been negative and we're just hearing about it now. So again, a lot of uncertainty going into next week's trading week, but the technicals on AMC right now are looking very solid. Now, when we come over to Stonko Tracker here, we've got about 30,509 calls in the money with 6,125 puts in the money. So again, it is more weighted to the call side right now, and the market makers are going to have to go out and buy more shares versus shorting shares in order to hedge the options that they are selling. Now, in addition to this, I want to briefly talk about the Ortex data as well over here. We've got about 18.6. Let's see if we can refresh this over here. 18.6% estimated short interest here. We had a net borrow of about 7.42 million shares today, 11% max cost to borrow, 10.52% on the average, and 9.56 on the minimum. And this is with 132 million shares currently on loan. Now, the last thing that we need to go over in this video is that Morgan Stanley, a large financial institution, is now very bullish on the movie theater industry going into the next year and a half. But they're really only bullish on one stock for a very specific reason or some weird reason here. So Cinemark jumps 9% as Morgan Stanley upgrades on movie rebound. Very interesting. Well, when we come down a little bit further, Cinemark stock is 9% higher Tuesday morning as Morgan Stanley upgrades it to overweight, seeing heavy upside in the return to theaters by moviegoers. Now, this isn't necessarily specific to Cinemark. This is more the movie theater industry as a whole. Beginning in late 2021, the North American box office has been trending steadily upward, and consumers have become more comfortable with going to theaters. Analyst Benjamin Swinburne says, with another step up coming this summer with 2021's biggest film, or 2022's biggest film, Top Gun Maverick, but also films drawing broader audiences such as family movies. More importantly, the movie business is driven by about 65% of the population. In 11% minority, the 11% of the people that are the minority are the frequent moviegoers, and they drive about half of the ticket sales historically. And he sees those customers returning to theaters in a big way. Aside from attendance, though monetization is important, both per capita concession spending and average ticket prices have bounced back strong in 2021 and 2022, while Cinemark has invested in innovative products to improve monetization. That's the first time that they've specifically mentioned Cinemark right here. Digging into the numbers, he expects North American box office can grow back to about 85% of 2019 levels in 2023, and that Cinemark can maintain about a 14% market share. Now, we all know at this point that AMC is the largest movie theater company, and their market share is going to be a lot higher than 14%. And when we compare what Cinemark is doing with the direct things that we have heard from Adam Aron about essentially the amount of money per person that people are spending at movie theaters, well, AMC would be positioned in a really, really good spot going into the end of this year. So this article right here from Morgan Stanley, whether or not they like to admit it, applies to the whole movie theater industry as a whole, specifically the largest movie theater company in the industry right now, AMC Theaters. So that is going to wrap up this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I will see you guys in the next video.